let's pull back the curtain on something you probably use every single day. We're going to talk about the hidden and kind of dark connection between our favorite financial apps and the massive world of financial crime. Yeah, think about that for a sec. That super simple tap on your phone, right? The one that gets you your morning coffee without even thinking. It feels totally normal, totally harmless. Well, here's the twist. The exact same tech that makes our lives so convenient, it's also become a super highway for criminals to wash their dirty money. And the scale of this problem, it's just staggering. Okay, but before we get into all the dark stuff, let's talk about the good side. Because the rise of fintech, well, it's been a genuine revolution, completely changing how we deal with money. I mean, fintech has just put everything on fast forward, hasn't it? Transactions are instant, sending money anywhere in the world is a breeze, and services that used to be for the select few are now in everyone's pocket. And of course, the pandemic just threw gasoline on that fire, pushing all of us into a digital-first financial world. And here's the catch. Every single one of those amazing features, the speed, the global access, the convenience, is also a brand new vulnerability. It's a new backdoor for criminals to stink through. So what crime are we talking about exactly? Money laundering. It's basically a financial magic trick. You take money from illegal stuff, like drug trafficking or fraud, and you run it through this complicated wash cycle until it comes out looking perfectly legitimate. So what makes fintech the perfect getaway car for this? Well, a few big things. Crypto can give you a ton of anonymity. Money can zip across the globe in seconds, way faster than any alarm bells can ring. Plus, a lot of these new platforms are in this Wild West regulatory zone, completely sidestepping the old school banks and all their rules. And the result? It gets almost impossible to figure out who's really behind the money. Criminals don't just walk into a bank with a suitcase full of cash anymore. It's a much smarter process now, and it almost always follows the same three-step playbook. Just think of it like a washing machine. Step one is placement. You got to get the dirty clothes, the cash, into the machine. That could mean splitting up a huge sum of money into tiny deposits across dozens of fintech apps. Then comes layering. This is the wash cycle. You create this messy web of transactions, bouncing money between crypto wallets and across borders, just churning it all up to hide where it came from. And finally, integration. The clean money comes out, and you slide it back into the real economy by, say, buying a house or investing in a business. Now it looks perfectly clean. And listen, this is not just some theory. We are talking about billions and billions of dollars being laundered through huge, well-known banks and even celebrated tech companies. Let's look at a few cases that show just how massive this problem really is. So our first stop is one of the biggest banks in Denmark. But the real story, believe it or not, all went down in its tiny little branch in Estonia. That is the number. An estimated 200 billion euros in suspicious money, mostly from Russia, flowed through that one branch. 200 billion. To this day, it's one of the biggest money laundering scandals in history. Just wow. And the fallout was huge. I mean, this went on for 8 years. The bank's CEO had to resign, of course, and then investigators started digging and found that other huge players like Deutsche Bank were also mixed up in it. It just goes to show you how connected and vulnerable the whole system is. All right, next up, let's talk about a German company called Wirecard. This place was once seen as a pioneer, a real shining star of European fintech. Then, one day, auditors found a hole in their books, a 1.9 billion euro hole. Money that was supposed to be sitting in trust accounts, it just wasn't there. It had vanished into thin air. And this was way more than just a simple accounting error. The CEO was arrested. The COO became an international fugitive. And then the real bombshell dropped. Investigators found out Wirecard was processing payments for an online casino that was actually a front for the 'Ndrangheta, one of Europe's most powerful mafia groups. Okay, now let's jump right into the heart of the crypto world. We're talking about a company that acted as a shadow bank for some of the biggest and best-known crypto exchanges out there. The company's president gets arrested. Why? He was wanted for laundering 350 million euros through this complex network of shell companies and crypto accounts. Seriously? This story shows you the real underbelly of it all. Crypto capital offered banking services to huge exchanges that couldn't get them from regular banks. And the money? Well, authorities traced it directly back to Colombian drug cartels. And get this, They were funneling all this illicit cash through a tiny, unsuspecting rural bank in Poland to run their global operations. You can't make this stuff up.
Okay, so after all that, you're probably wondering, is anyone actually doing anything to stop this? And the answer is yes. The fight is happening on two main fronts. We're talking tougher rules and way smarter technology.
Regulators are definitely trying to play catch-up. A big weapon in their arsenal is the EU's fifth anti-money laundering directive. And this is so important because it's designed to close the exact loopholes we've been talking about. It basically forces crypto exchanges and wallet providers to actually know who their customers are, and it cracks down on things like anonymous prepaid cards. But rules can only do so much. The old way of fighting fraud, having human analysts sifting through mountains of data, is just too slow. It can't keep up. This is where AI is a complete game changer. It's fast, it's automated, and it can spot these tiny, weird patterns across billions of transactions that a human being would never, ever catch. And this isn't some far-off future tech. It's happening right now. The banking giant HSBC is already using AI to scan through 40 billion transactions. And the cool part is, the AI isn't just flagging one bad account. It's mapping out entire hidden criminal networks, connecting all these dots that look totally unrelated on the surface. So all of this leaves us with a really big, critical question. Innovation in fintech is moving at lightning speed, while regulators are always a few steps behind. So who's really responsible for keeping our money clean? Is it the tech companies building these tools? Is it the governments trying to write the rules? Or is it us, the people who want our money to move faster and easier than ever before? The truth is, it's probably a little bit of everyone, and it's a huge challenge we're going to be dealing with for a long time to come.